Hey family, hopefully all is going well. This is Anthony Tirado, your educator with Seven Figure Boss. And in today's video, I'm going to be talking about something that's constantly going to be happening when you're trading. And that is identifying the market conditions. So in today's video, I'm actually going to describe three important market conditions that you should obviously be aware of, and then we're gonna jump straight into the market, analyze, and obviously show you guys how you can maximize understanding this concept. So the first market condition that I'm going to be discussing is on our far left. It's actually called an uptrend. Now, what I want you guys to notice is with an uptrend, which is over here, right? You're gonna notice that higher highs and higher lows are being created. So what that means is, as this market is moving up, right? This right here becomes, at one point, it was the highest, what? The high. Then this low point, look, it's higher than the low. So it becomes a higher low. So as the market is breaking up, a new higher high forms. It retraces or it pulls back and it creates a higher low. So as this market is what? Pulling up, breaking, pulling higher, you're going to notice this is actually an uptrend. So when you're dealing in an uptrend, what should you be doing? You should be looking for buying opportunities. Opportunities to get in on the buy. Now, the second type of market that I'm going to be talking about is actually called a downtrend. Now, when you notice from this image, with a downtrend, the market is, of course, it's going to the downside. But the most important thing that I want you guys to realize is that lower highs and lower lows are being created. So what that means is, as the market was pushing up and obviously reached a point, it began to break down, right? It broke down, it created a lower point, right? As it pulled back up, guess what? Did it go higher than this? No, it was lower than that, but it's still the higher point. So it created a lower high. So as this market continues breaking the structure, going lower, it's a lower low, a lower high, a lower low. And if you notice, if you would have already identified this downtrend, seeing these lower lows and these lower highs being created, you would have been looking in for the sell. So when this bad boy pulls up and it fails to break higher, you're going to be looking to what? Go down, sell. And that's when you notice it continues going to the downside, right? Now, when you're trading, these are the most two important market conditions that we're going to be dealing with. And the reason I say that is because during an uptrend, you're going to be buying the market, right? Versus when you're trading the downtrend, you're going to be selling the market, right? Now, the third market condition that I want you guys to be aware of is actually something called a consolidated market, also known as a ranging market. Now, with these type of markets, you notice, look at the candlesticks. They're so small, they're showing indecision. But the main thing you notice is that this market is not going high, it's not going low, it's just bouncing sideways, right? So when you're looking at a ranging market, one thing you guys need to be aware of is you don't need to trade. You need to simply watch what's happening. Right? So when the market eventually does decide to break, whether if that's to the downside and starts creating obviously lower lows or lower highs, or maybe it starts breaking to the upside, then you can apply your technicalities and obviously enter in on a position. So when you're looking at these three market conditions, an uptrend, remember, we're going to be buying the market. A consolidated market, we're staying away from, meaning we're watching it. And a downtrend, we're going to be selling the market. Now, what I want to actually do is go straight into the charts so you can see how we're going to apply this, because this is something very simple that happens over and over and over again. So let's actually jump in, and you're going to notice that the platform that I'm utilizing is TradingView, right? Now, when I'm looking at my market conditions, right, what type of trend we're dealing with in the market, I'm actually on my 30-minute time frame. So make sure you're on your 30-minute time frame, right? Now, the reason I like to use my 30-minute is because you start to notice the candles are clear and the structure is clean. What I mean by structure is you're able to see where the market's at, right? For example, The market reached this point. Boom. That's a nice structure, a nice level of price, right? You see how the market reached this point? Boom. That's a nice structure, a nice level, right? And these are also points that you can also serve as a support or a resistance, right? That structure of price. But you're going to notice as we're identifying our market, you're going to see how the market starts to break structures, right? So remember what we were discussing earlier. There's three different type of market conditions you're going to be dealing with. A downtrend, an uptrend, and a consolidated market. Now, this is not rocket science. It's not difficult at all. Looking at the current chart that we have in front of us, what type of trend do you think you're dealing with in the market, right? What do you see is happening? Clearly, you notice that from this point to this point over here, the market's what? It's going down. But something that's more important for you to identify a downtrend is we need to understand what's happening, right? Now, if you remember, let me actually go back. When we're looking at a downtrend, we need lower lows and a lower high, right? So let's see how the market's moving. Clearly, it obviously was moving up at one point, right? You notice that it's pushing to the upside. It's what? This is currently what? It's moving up, an uptrend. But then, does the market go higher? No. Here, let me just zoom in there so you guys can see. The market does not go any higher at this point. In fact, if you guys remember, this right here, we have structure right there, we have some structure right there, we have some structure right there. As the market is pulling down, look what we got. As the market is pulling down, you see the straight impulse. What is the market really doing? It's breaking all of these structures, right? So you notice now this right here creates a lower low. So as the market is pulling back, you need to ask yourself, did the market break this high? Did the market go higher than here? No. In fact, the structure levels that we had right there, the market's holding that structure. The market's holding this structure. Did the market break above there? No. It pulls back. Boom. Right? So this right here is a lower high point. So far, we have a lower low and we have a lower high. So as the market is going down, now clearly you notice, did the market break this? No. So you ask yourself, what's the next thing that happens? Okay, it pulls back. Yes, it creates what? A lower high, but I want you guys to be aware of something. Remember this. As we start to apply what we've learned, marking up our charts, Fibonacci, all these little technicalities in the market, you're going to start to notice how the market's reacting. For example, as the market is actually starting to make these moves, you see these wicks? We're going to be able to start identifying zones or areas of interest, right? Because now these give you areas or points where you want to do what? Sell with the market. But I'm going to show you guys where's that opportunity to get in on the sell, right? Because clearly, right here, we truly haven't identified the trend just yet. The lowest low has not been broken. You see right here, the market's trying, but boom! It finally breaks that lower low. So what I want you guys to now notice is as this market creates this lower low, it pulls back again. Now, if you realize the structure we had up here, it hasn't been broken. The next structure we have is right there. Was this broken? No. After that, we have the next structure right here, which is that lower high. But you notice the market throws wicks, right? So we need to make a decision and ask ourselves, is this a potential lower high? Right? Is this a potential area for us to get in on the market? Right? Because if that is the case, what other technicalities do we have that we can apply to getting in? And this is where everything else comes in. Your zones, your Fibonacci, right? For example, I'm not going to go into those little topics, but you see what happened here? We have resistance, it's broken, it becomes support, right? The market bounces between it, it breaks it, becomes resistance, right? Look, resistance. That's helping us identify amazing trade setups where we're able to get in, place our stop loss above structure, above these high points, and do what? Go in for the sell. Now, if you notice, This is what we see right now, right? So the market actually pulls back. Boom. It truly has not broken this high point. It's holding with this lower high. But what's the next thing that helps us identify that this market is looking to continue going down? It breaks and creates a what? Lower low. Now let me show you guys something. Right now we're dealing in a downtrend market, a market that's moving down. As the market is moving down, you're looking for opportunities to get in on the sell, right? Make sure that when you're identifying your markets, you're applying your other technicalities. And the reason I say that is because what do we have here? We have the market, it's what? It's pulling back. Okay, it throws wicks, right? You see maybe this right here was a news event or something, but we're being patient, 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 patient. Now, as the market is looking like this, what are a few things you need to realize? We're dealing in a downtrend, right? If you identify some structure, what do we have? We have this structure of this level right here. You see how that market holds that structure, that point right there? So if this is a downtrend, you need to ask yourself, is the market breaking high or is it failing? Right? So beside that, when you start to mark up your charts, you start to what? Apply your other technicalities. What do you see happens here? The market's showing support, 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 support. It breaks it, but then it comes back, shows support. It breaks support and now becomes what? Resistant. Throws wicks, resistance. So my question is, obviously this right here, is this an opportunity for you to get in? Obviously the market, what? Reacted a little bit. So if that were the case, and we were looking to get in, what would be our trade setup on the sell? We would obviously be able to get in, place our stop loss above, look what we're doing, above the high, above that structure, and then we'll be able to take the market down. How far down? The first level we're going to be able to take it to is clearly back into these points. So let's see what happens. Okay, the market's just what? It's going against us, it's being patient. Oh, it's just what? Consolidating. So this right here, we're in the trade, but look what happens. Okay, there's so much consolidation, but you notice we are actually profitable. We are actually seeing growth in the setup. But what I want you guys to notice is, as this market is making this move, consolidation, what is it doing? Sideways, right? Clearly, we were already in the setup, but if you notice a market that's just consolidating, moving sideways, how do we identify consolidation? You notice, okay, it failed the high, so it created another lower high, so this is still helping us with our downtrend. Did the market create a lower low? No, right? So this right here, all of this time, the market is just moving that sideways. So as it's finally what? Just moving sideways, it's still doing what? It's actually still failing those highs. So these are little things that I'm always applying. And you notice we're still on our 30-minute because it gives us great structure, great sense of seeing what's happening on the charts, right? So we would have had that market pushing it down, pushed it into these levels. These would have been points to just take our profits. Why? Because the market's just bouncing there, bouncing there, bouncing there. So we need to see, obviously, a break. So let's see what else happens here. Boom! So right here we see a few things happen. The market finally breaks, right? We have another what? Another lower high. So this is what? Pure downtrend. What do you think we're going to be looking for in this setup? We're still going to be looking for sells. So if you notice, what's the most recent structure? Right here, this next lower high. So you're asking yourself, is the market breaking above it? Let's see. No. Right? So that would have obviously been a setup for the sell. Right? Now your patience, you're patient, you're patient, you're patient, you're patient, you're patient. Patience, right? If you notice, look what the market's doing. It's selling. All of these opportunities are just setups because you already understand where the market's moving, the direction. So when you have the directional bias, all you're looking is for those setups. Like right here, what's happening? Support, 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 support. The market breaks that support, becomes resistant, resistant, resistance, resistance. The only time you're really looking to find a setup is at this point, and you're going to place your stop above the highs. So when you start taking it down, you're going to take it down, and as you move this bad boy down, you'll be able to have a risk-free trade. So what we did right here is we dealt with a downtrend market. Now let's imagine, let's see if we can fast forward because this is just amazing setup for the downtrend. It continues going down, continues breaking lower. Let's see. Boom, okay. When do you finally understand that your trend is over with, right? You're coming from this downtrend that's been moving amazing to the downside. What helps you identify that? It's what? It's failing, it's breaking lower. It's failing, it's breaking lower, right? And when it fails and it starts breaking lower, like this, what are you really looking for? Opportunities or pullbacks. Opportunities or pullbacks for the market to show you, right? Opportunities or pullbacks like here, boom, to then take that bad boy and continue down, right? But eventually you're gonna reach a point that although that setup was an amazing setup to get into, boom, it moves 30 pips, right? 39 pips. The market eventually stops, right? It might break a trend line to the upside, right? But when you finally notice that the market stops, let me show you guys what that's gonna look like, because here we still have what? A downtrend. We still have a downtrend. Boom. So when the market finally, what? The most recent high is right here. Bang! What did the market do? It actually broke. Ready? It breaks. So when you're dealing in an uptrend, we're still on the 30-minute, what happens? The market, let's go back. When we're dealing in an uptrend, it's going to create higher highs. Remember, the most recent high was right here. The market now created a higher high. So this right here is something called a higher high. So this isn't telling us that we're in an uptrend just yet. We're being patient, right? Because the next thing we need for an uptrend is a higher low. So what that means is, at one point, this right here was the lowest point on the market, right? So it's called a lower low. We need the market to go higher. The next low needs to be higher. So this right here is what? A higher low. Great. We just identify it. We haven't broken the high just yet, but we start to see, is this maybe moving that way? The next thing you notice is there's another higher low. Boom. Okay, this is not an uptrend just yet. Boom. Once the market breaks that high, guess what now we're moving in? We're moving in an uptrend. And when we're looking at an uptrend, we're looking for opportunities to buy the market, right? So as the market continues, failing the low, we're looking for opportunities to buy. Where are these opportunities? With your technicalities, it can be something as simple as a resistant point. It could be something as simple as a resistant point being broken and then retested, right? Because this would have been a setup that if you would have taken it, where would you place your stop loss? Under that low. Why? Because the market should not go lower than that if it's an uptrend, right? So as the market goes higher, you push it back and then you continue to manage. So let's continue managing this trade as it progresses. We see that it's failing those highs, right? It's failing those lows. It's going higher. It's breaking those highs. Look at that. So all of this is amazing uptrend opportunity. As we continue moving to the right, look what's happening. Let me just show you guys in a dotted line so you guys can see. The most recent low was right here. Where's the next recent low? Right there. Boom. Where's the next recent low? Right there. Boom. What's happening? It's going up. Where's the next recent low? It's right there. Boom. Where's the next recent low? Boom. This is all confirming uptrend. Buying opportunities. Where do you buy? Remember, earlier over here we talked about when resistance is broken, it becomes support, right? So you are going to continue looking for those opportunities. When resistance is broken, you see these wicks? That identifies your zone. When resistance gets broken, it becomes a supportive point. So if you didn't get in here, look, if you didn't get in there and are continue to push this bad boy up, you at least could have gotten in right here on your next entry as it pulls back, right? Failing the low, you would have placed your stop losses under those lows and taken it up, right? So as this bad boy is moving, look what's happening. Just so you guys can see, it's failing the lows and breaking higher. This is why I use the 30-minute, because it's so easy and simple to read. So all of these points would have been what? Opportunities for us to buy the market, push this market up. As the lows are going higher, obviously it's breaking higher. So all of this is still opportunity for us what? To buy. We're not looking to sell. We already know that this is a buying market. Now, eventually, you should reach a point that the market maybe what? Let me erase all this. Consolidates, right? We moved so nicely to the upside. Maybe now we might just need to consolidate. So if you've taken this buy, there's going to be a point in time that the market reaches a high point. Boom, it reached this high point. Did it break it? No, it's holding. It's not breaking any lower, so you still are like in an uptrend, but it doesn't want to break this ceiling. What do? Well, if you were maximizing from the opportunity, you would have already been over 70 pips in profit, 80 pips, right? You get out of the trade. You wait. Because if you notice, this market is just now bouncing between what? Two areas, consolidation. So I'm not entering anything. If anything, I'm just watching. Look, okay, look what it's doing, sideways. You see what happened here? It tried to fake us out, not really holding, consolidation. I'm still watching. I'm still watching. The reason I'm watching is because when you see these wicks, it creates a zone. It creates a zone. Let's look for more wicks. Look at this. This creates a zone, an area of reference that the market's going to bounce between. And as the market's bouncing between, you need to be patient. Look at that. It's bouncing between that. Patient. Now right here, you notice that it breaks. Right? So these are little things that you're just watching for because you need to ask yourself, is this a failure? Is this a fake out? You know, what's really happening right there? But what's really happening is just consolidation sideways. Do I see an uptrend? Do I see a downtrend? No, I'm staying away. You know? So let's see. When do we eventually start to see something? Okay. Let me zoom in here. You see the market, it fakes, it hits this point. Okay, it breaks. Boom. It's starting to what? Fail, break lower. Let's continue. What happens? Okay. Let me erase all this so you guys can see. After all that consolidation that we stayed away from, the market reached this high point. Boom. Did it go higher? No. It's starting to break. It still hasn't failed that high. Did it break any lower? Okay, it's starting to break lower. Okay, so I'm starting to see a little bit more. It's starting to fail that high. Cool. Guess what? It's starting to break lower. So what is that? Now helping you identify a downtrend, right? You see it? So when you see a downtrend and you see something as simple as this, what's happening? Well, look at these wicks. Because these might be opportunities for the market to come back, retest, and go lower. But also, a great thing to do is just identify the most recent high, right? The highest point was there. After that, it was there. After that, it was there. If you're in a downtrend, it should not break above it. So what happens? Okay, boom, 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 boom. Ooh, if you would have touched that retest, you would have been in profit, selling the market. But regardless of that, look what's happening. The market continues breaking low, pulling back, breaking low. So where's the most recent high? Right there. Bang. What should you look for? A failure. Does the market need to break higher than this? No. So if the market pulls back, let's see. So far the market just continues going low. If we would have had our entry here, we would have been great. But let's just look at other opportunities of entry. Because it's breaking low. The most recent high is still here. Remember that. It's breaking low. This is just the market doing its thing, going down. So as it pulls back, you see as it's pulling back right now, all of this pullback, these are opportunities for you to look for re-entries, right? When you start to see wicks or levels of support that are broken, like right here, look for the pullbacks, right? So when I look for those wicks in those areas, all of those wicks help me see where the indecision is to being able to get in, right? Seeing those points where we get in, maximize, right? So these are the three different types of markets that we're going to be dealing with when we're trading. Obviously, sideways markets or consolidated markets or downtrending markets or even uptrending markets. So make sure when you're identifying your markets that you're trading with the trend and you're finding those best opportunities. So I hope this video helped you understand a little bit more about identifying the market conditions, the structure on the charts, and I hope to see you guys again. Take care, family. This is me, Anthony Tirado with 7 Figure Boss, logging off.